Alrighty, let's welcome everyone out today to the Hurley Investments midweek commentary. Glad to have you here. I wanted to go through a little bit because I'll be honest with you, the last couple weeks I've sat around, I've just thought, I'll be the first one to tell you, I'm a little confused. I'm a little confused about our market. I haven't understood whether it's been our stock market, China's stock market. I'm confused. So I thought, why not give a realistic expectation to you guys on what I do when I just don't know. I'm going to start off with a question to the group. What do you do when you don't understand what's going on in today's stock market? Dan, I'm going to answer that question for you. Dan says, well, if you're confused, how do you think I feel? Hey, Dan, I'm just a money manager. What can I say? I'm just a money manager. So, out of curiosity, what do you do when you don't understand what's going on in the stock market today? I'll tell you a conversation I had this morning. It was pretty easy. It was conversation I had this morning is get out of Dodge and most likely book a loss. Wrong answer, by the way. Trade small. Great opportunity. Trade small. I like that answer. Trade small. That's a perfect one. i.e. use less contracts / money. Great answer. In fact, Maud, that's one that I hadn't thought about. Abraham, think of what should I do if it goes wrong? What should I do if I get it right? Aha. So look at the different scenarios as they could play out with your portfolio. Love it. Spelling's not all that good today, but I've seen worse. Make sure you have protection. Wait it out. I like that one too. Take a vacation. Huh. And I'm sorry, actually, Dan, I didn't put that other one. I'm going to put that as a separate one. Look for opportunities. So, with all this said, a couple of years ago, I made the comment, hey, I don't trade the way I want to trade. I trade with my wife's risk tolerance. What I mean by that, I spent a lot of years in the spread trading arena. And I had some good ones and I had some bad ones. After a couple really good years, I netted out a really darn near unbelievable return or profit. But that occurred over the 2006-2007 years, and in the end of 2007, for I guess the best way to make the comment, I got my butt handed to me. I got my butt handed to me on a silver platter. And because of that, I started to take a look and realize, okay, I have got to do some things different. And I scared myself. In all honesty, I really, really scared myself in 2000, the end of 2007, because everything I was putting on was wrong. I literally couldn't catch a break to save my life. And it was discouraging. In fact, it was so discouraging that I almost never went into business. So here I am getting ready to start my own business. I've got a couple of years of great returns, and I was blowing it. I just started to want to take other people's money, and literally I was blowing it. I couldn't do anything right. So at that point, I did what I now do all the time. And I did it at a time that saved my butt, and I learned something in the volatile market of 2008, that it's not too hard to make a profit. But the key was having the correct trade on when literally you don't know, you're toast. So trading with my wife's risk tolerance, I built up a portfolio spread trading in a ridiculously boy, bullish market from 2006 to the end of 2007. And then I went strictly to collar trades. And a lot of people sometimes tell me, well, Kevin, I don't make enough. I lose money on long puts or something along those lines. Yet you shouldn't. This is your safety trade. Then I use the Brig credits on the short call to create spread trades within the collar. Those can usually be strangle straddles, extra long positions, ratios. And it literally made a ridiculous difference in the trading. I brought this up because we had Warren Buffett, and there's a video for this, but he made the comment, if investors are worried about their retirement savings after watching 2016 wild market fluctuations, Warren Buffett has some advice. I would tell them, don't watch the market closely. The money is made investments by investing, by owning good companies for long periods of time, and then doing it for 10, 20, 30 years from now. I'm going to disagree. I see a problem with owning for a long period of times because we have times in our market where literally we go through a time period in our stock market where we have 12 or 13 years of no growth. In which case, I really haven't seen, if you backtrack, I really haven't seen the buy or hold strategy, and I'm trying to get my where is that? got a slide in here somewhere. Where? If I was to bring this up, I can show you upwards to a 12.5-year period where we went through no growth in the S&P 500. And I'm sorry, everyday people can't handle a 12 to 13.5-year zero growth time period in our stock market. In fact, most of us can't afford to take off that amount of time to have our portfolio grow. So, hence, we collar trade. On the downward movements, we pick up shares. On the upward movement, we might not make as much, but we're protecting ourselves to the downside. Now, I had someone that I talked to today say, but Kevin, what about the black swan events? And I'll be honest with you, I don't trade black swan events. I don't set up trades expecting something to happen literally 0.3% of the time, 1/3%. I don't start preparing for setting up a trade to trade not even something that happens not even 1% of the time. I don't understand it. I would not be where I'm at by trying to trade the 1/3%, which would ignore the other 97 or 99.7% of the time. So I don't. I trade on the averages, on the probabilities, and I do that through the collar trade. And obviously I try to do the best I can to literally give myself every opportunity. And the best part about it, I believe that collar trade 100% takes out market risk. Well, Kevin, what about not happening on crossovers or so forth? So I'm going to tell you plain and simple, there are times when I have positions not covered. There are times when I have a position that I'm going to let run a little bit. There are some times when I'm going to do everything I can to make as much money as possible, and off I go. Quick comment. As an average, how much time or percent of the year are you protecting a trade? Usually I'll be protected in my trade upwards to probably 80% of the year. 8 out of 12 months. I usually will have some period of time when I'm not going to have protection on a trade, as it for lack of a better term, as it is moving in and out of ranges. So there are periods of time when literally I have nothing on my trade or a way out of the money covered call. In fact, if I can go over that right now, I've got Abraham asked, in a black swan event preparation, would you consider it a hedge for the ES, for example, which works in wider periods? No, I'm not preparing for a black swan event. Those happen so far and few in between that a black swan event is something I will never trade for. I will react to it, but I'm not trading for black swan events. They happen literally less than 1/3% of the whole time during the year, so it's not on my radar. Right now I have Apple shares with a April 110 short call. I have Disney with 95 and or 92.50 long puts. I have Netflix shares. I actually guess Ford would be in there, and Nvidia would be in there, just shares. I do have Facebook and Visa and callers. And I guess that's my big stuff right now. SanDisk. I've got SanDisk and Zions Bank just in shares right now. Baidu. I'm pretty sure. Where's my big Baidu? Baidu. I have a 155, 160-ish, or a 165 bull put, and 200 June short calls. So I'm in a position of uncertainty. But as Dan just makes a comment, so if everything is the 3 indicators looks bullish and the overall market is bullish, it's okay to take out protection, watch for it to put it back on. The short answer is, Dan, yes. It's pretty interesting because I'm going to make a comment about Jeffrey. Jeffrey, more often than not, thinks it's always important to have protection on. But Jeffrey doesn't run into the issue of having to provide a return for individuals. So I'm going to come back, and Jeffrey and I kind of argue this back and forth all the time. Why would you put on a bullish trade, long put, short call? Why would you put on a bearish trade on a bullish moving stock? It doesn't make sense to me. So no, I don't always have protection on. Alibaba, I'm pretty sure I've got, it's 90 long puts, and pretty sure those are March too. And 110 April short calls. So where I'm going at with this, in a roundabout kind of way, time, one more comment is that time is usually your friend. Market down year to date, and Disney shares, not Visa shares yet, but Apple shares, Baidu shares, NVIDIA shares, Ford shares have been added to accounts. And you seem to be in pretty good shape to be in that arena or area. All right. Any questions about, well, let's just put it out here. Any questions about what I'm trying to say here? Which is, what I am trying to say, in times of volatility, you guys had some great answers, some fabulous answers actually. Get out of Dodge and most likely book a loss. That's not a great answer. Let's move down to the other ones. Trade small. Great comment. Great idea. I hadn't thought about that one. Look at different scenarios as they could play out in your portfolio. Make sure you have protection weighted out. Great answer there. Look for opportunities. I never thought about that one. So things you can do to still keep yourself in the game, because the reality is you don't know. And you hate to miss the upside just as much as you want to be protected to the downside, so why not protect yourself? Do I prefer Ford to General Motors? Hands down. General Motors has performed better, in all honesty, but this is an integrity thing with me. I don't ever want to trade government motors, and I still do think Ford should be every bit as pricey in that $30 range, which means I see more upside potential on Ford than I do any of the other car manufacturers, to be honest with you, and that includes Tesla. So I like Ford, but again, I'll be honest with you, I've amassed tens of thousands of shares of Ford. As for 4.5, 5 years, it ranges between $17.50 and $12 a share. So we get a move above 20, and I'll have people that are booking 500% returns on Ford that they've been in for 5 years. Any other questions? Okay, what's happening this week? I'm just going to get out the boring stuff, but I want you guys to tell me what's happening this week. Uncertainty on the ECB and more stimulus. Agreed. I can also put in there uncertainty in China. Imports and exports were horrible. Dan actually asked an interesting question. How about some direction on where you're trying to decide to add more shares? Are you trying to pick the bottom, or do you use certain data or chart strictly? So, Dan, I'm always using a chart, but the first thing that makes my decision is if I've got the profit in a long put to add shares, I might start adding shares right there. In times of choppy, uncertain markets, I would really be looking to add shares immediately, because they're going to be bouncing up and down. But usually I'm looking at some certain way to have a support level. And there are some people here, Dan, that have seen me trade their money or seen me trade over a period of time where I may pick a bottom on some things and it doesn't work out. I've added shares on Disney to some new accounts at $100 a share, and then down closer to $91, $92. I look pretty smart at that $91, $92 mark, kind of look like an idiot on the 100. But again, if I was wrong, and as soon as 100 no longer held for Disney, we put our protection on. Anything we make on the way down is profit on the way back up. All right. Anything else that's occurred this week? In fact, what do we lack right now? What's lacking right now so far Monday, Tuesday, Wednesday? We have little to no U.S. economic news. In fact, the political delegates for the primaries are running the show right now. Comment just made. Unless a black swan, the next stone in the road is the Fed again. Do I agree? Yes. I think the next down leg in our stock market is actually, we'll go through a bump in March and in May for the Fed meetings, but I don't think we'll have those Fed meetings. If they do raise rates, we'll definitely head down a leg lower. As you make that comment, Abraham, I may say the next stone in the road is the sell in May, go away. So I think the seasonal selling before summer will be our next leg down. Someone made a comment, and comments on oil. Would you buy into the recovery? Heck no. In fact, any upward movement on oil, I would be selling my positions. Fundamentally, with the oversupply, over demand, we might see oil not coming back to that $75 a barrel range or even a $60 a barrel range till 2017, 2018. I've even heard some estimates all the way out to 2023. So, any oil recovery, I would be fading. And I think it's just a supply and demand. And I tell you, I don't see the supply tightening like it should. And I'll be honest with you, I've done a lot more driving and being on the road because the prices are so low. So you say sell in May is basically the signal of the season change from cold to heat. Yeah, or it's more of a different way to say it, Abraham. It's more of a time where the brokers go on their summer vacations and for lack of a better term, book what profits they have and get out of Dodge to come back and attack it in September, October. You don't see the redemptions or the turnovers in funds during the seasonal summer time. I think it's because these jokers don't work. We're on market end this week. I'm going to go higher. I don't have a percentage today, but I tell you our markets are going to move higher. When I look at the Dow Jones, we're technically bullish. But we are running up against the 200-day simple moving average. Not a bad run. 15,500 up to 17. good 10%, not a bad run. Ditto on the S&P. Again, we were also technically bullish. Come on, Hurley. And running up against the 200-day simple moving average. And NASDAQ, technically bullish. And in no man's land for the next leg up or down. It's just meandering right in the middle. Nothing much on the horizon. I'm still going to stick with my 4% growth in March because I've got nothing to tell me otherwise. No real earnings. This is the last little bit of retail. Dick's Sporting Goods, Dry Ships in Line. You got Zag. Square on Wednesday I thought was interesting. Dollar General on Thursday. Vail, the Mountain MTN on Thursday. Kirkland on Friday. No earnings that are bellwethers that move the market. As for economic reports, nothing to move the market in the near future. It's a pretty slow week. Internationally, it's the ECB Draghi talking tomorrow. But that's really about it. Not much is happening on here. So we're basically stuck in a wild tangent games. We're literally basically stuck in a week where we have no real movement that's telling us if we're going one way or the other. I'm looking to trade. I'm somewhat stuck. I've got positions that are set for the long side. I've got a couple leftover long puts that I haven't done a really good job shorting against because I don't have a market direction. If I had to make a bet, I think we'll have a bit of recovery here in March, sticking with my 4%, and it wouldn't surprise me if the sell in May and go away starts to happen more in April as we head down for the seasonal selling in summer. Doesn't mean you don't have a pretty good range and can't see the market rebound back and forth. It looks to me that the next 6 months, a drop is trending slowly but real. Abraham, I'll be honest with you, I don't see that. I think we got into January and the selling continued. If anything, we've been sideways, somewhat bouncing up again. In fact, if you take a look at the, I don't want to look at the NASDAQ. If I am looking at the S&P, I thought we just broke out of a triple top. So I would be looking to see, that's why I'm saying a little more forward movement. But I don't think we'll hit 2100, and I'd expect to see that sell off in April, Mayish to come right back down along and test for a triple bottom, that 1800 number again. Now, Abraham made the comment, but Kevin, are you not seeing the downward slope of the 200? And yes, I am right now, but I also see this movement right here, and because this is post this is data we've already received, historical data. you're going to see this start to trend a little bit up here, just based on the last couple weeks. So yes, right now you see that 200-day somewhat trending, but because of the uptrend, you'll see this start to smooth out and it'll see a smaller bounce back up. 50-day definitely down, but again, you're going to see that start to trending because we have this data right here that's coming into those averages. We're going to be losing on the 50-day a bunch of this data coming up here in the very near future. In fact, we're going to lose a lot of this on the 50-day in the next 2 weeks. So you'll see a definite turn, kind of like here back in November. You'll see that on the 50-day pretty quickly. But Abraham, way to notice it. I mean, that is something to look at. I just don't use a 200-day moving average and a 50-day moving average to tell the next 30-day or 60-day trend. I just haven't seen that to be accurate. So questions for the group. What questions do you guys have? I tried to foresee 6 months, but it could be totally wrong. You know, Abraham, I just haven't seen it work by looking at the past 6 months or a 200-day, which is a previous 6-month moving average. I think in general does a poor job of giving you the next 30 days or the next 90 days. I just haven't seen it. And it's not a matter of being wrong or right. It's just something I don't use because I've dismissed it a long time ago. All right, anybody else have any other questions? Abraham, I'm considering to look to study in equity to prepare myself for collar trading. Do you have 3 suggestions to consider worth? I'm considering to look to study equity to prepare myself for collar trade. So yes, the short answer is you're going to be looking at certain sectors. And what I mean by that, financials are a sector that should rebound with with some interest rate hikes. I'd be taking a look at a Goldman Sachs, a JP Morgan, a Morgan Stanley, a Bank of America. I'd be looking at some of those bigger ones. I also would maybe look at a Zions Bank, a regional, that has some good side potential upside in the near future. Regardless of the economy, earnings, it'll be strictly an interest rate play. I like Facebook for technology right now. I would be in Alibaba or Baidu possibly for some international exposure. I'm still a fan of Disney. I see their long-term track record being intact. Visa, buying opportunity on Visa right now. Another pullback as it's caught in a range with stellar earnings, new business coming online. I see opportunities in Visa and Disney. Looking at those opportunities, again with interest rates, I think MasterCard could be a play. I would not necessarily spend any time on American Express, but Citigroup, another one that's both a bank and a credit card that you could look at. There are a lot of opportunities with our pullback here. And I can't remember, I think it was Dan that maybe said it, but now it would be a great time to look at opportunities. And, you know, it goes back to doing your fundamentals. Do your due diligence, take a peek, and let's see what you think. In all honesty, I brought some people on in April, excuse me, not April, in August, and I still have some people sitting in 50% cash right now. And one of my triggers is going to be a break above a 200-day simple moving average. That is something that I think would be a big move to the upside. I'm unfortunately also leaning towards we might get a lot of our gains here at the end of the year. It might be another crying out loud, we get an election where our gains for the year are going to come in a 3 to 4 week period in November and December. If that were to occur, it means I've got to do a lot better job on shorting calls to take advantage of a stagnant movement on our index right now. Great question, Abraham. I appreciate it. Thank you. All right, what other questions do you guys have? If not, if there are no other questions, I would like to let's call it a night. Let's call it a night. I will get this posted on My Hurley Investment or the Hurley Investments blog, so you guys can have access to maybe hearing this again, grabbing the notes off of there. As always, I appreciate you guys being here. It's a pleasure talking with you. Don't forget, I am licensed, bonded, and insured. So as you have trades or things that come up, I legally can go over those positions with you. We can somewhat do it as a group. Abraham, will I keep coming on Wednesdays? I've got a ridiculous schedule. In fact, to let you guys know, I'm heading out to Seattle next week. So next week I'm going to have a Tuesday chat. I then am back to Wednesday, and then I might be gone for a couple weeks. I've got a brother that's going to go through a surgery, be in a hospital for anywhere from 1 to 2 weeks. So I may be off for a couple weeks as I help a brother get through a surgery. So look at the website. Jeffrey has it bouncing around. I'm literally trying to fit the chats into my schedule to be available for you. So the question is that I'm avoiding, Abraham. Pay attention to the website. I jump back and forth between Tuesday and Wednesdays, and I might even have to jump to being out of pocket for a couple weeks. But I'll let you guys know. Dan, thank you very much. I appreciate the comment there. All right, guys. Hey, you take care. Have a great evening. I look forward to seeing you all next week. Next week will be Tuesday night again, and I'll talk to you soon. Bye-bye.